Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, the Australian dollar fluctuated around the 68-cent mark. However, supply soon returned following the release of the Australian CPI data. The latest data from the Australian Bureau of Statistics, the ABS, shows a 3.5% rise in the Consumer Price Index, or the CPI, for the year ending in July 2024, down from 3.8% in June. This has led markets to adjust their expectations, shifting from a potential rate cut from the RBA in November to a move likely of 25 basis point cut in December. Eyes now look to the Australian retail sales and also China's manufacturing and non-manufacturing PMI on Friday. While looking ahead to today's economic data, we've got the Q2 GDP out of the US and then Friday's July personal consumption expenditure, the PCE data, which could signal future policy easing. Traders are speculating on a potential rate cut of 25 to 50 base points in September. So turning to the technicals, we still need to clear this level of 68.40 to increase the potential on towards 69 to 70 cents. That being said, the pullback may see demand returning from 67.60. If so, the bounce could lead on towards the top side and clear 68.40 and on to its preferred target, as I mentioned, at 69 to 70. The dollar index, which measures the greenback strength against a basket of six major currencies, rebounded to 101.05 from 100.68, which in turn saw the euro drop towards this key trend line. I do anticipate that the market may weigh on this a little bit, but demand could be holding just underneath and see a false break and then initiate a move to the upside. Support is seen around 110.45 to 85, and looking to the top side, a clearance of 112 figure 15 should move on to 113 to 114 in the broader call. But the bearishness may persist in the next 24 hours, but could give opportunity to the bullish trader. The dollar yen, well, the pattern has consolidated as it moves sideways in a 144.25 to 144.90 band. I still feel from the technicals being somewhat heavy and the weak MACD could see a further slide towards 142. Now a break beneath 141.60 will give further scope to the downside, and jumping to the weekly time frame, we can see there is little to go on and may see a significant drop with the base now holding around 130 in the broader sense. But as I mentioned, confirmation will be from 141.60 break. Finally, sterling shows a little bit of profit taking and buckles the monthly bull trend, as we can see here. As the RSI pulls away from the extreme overbought conditions, it's now close to the midway point. Looking to the outcome of today, I feel the market may find a little bit more weakness. However, towards the support level of 131 figure 50 area may find demand and therefore correct back towards the top side, clearing 132.25 and on towards the region of 134 in the broader call. Wrapping up with commodities, the market is weighing on the downside as the dollar rebounds, but I feel it could give opportunity to the bullish case if we see a bounce off 2,486 to 92 and look up towards this top side level, which is seen somewhere around 2,526 to 32. A clearance there would give further scope to the upside and expand on towards 2,547 to 52 and then on to 2,600. Weakness in oil continues for the second day as the market now wipes out close to 3% in 48 hours. I'm looking to the downside target of around $72 a barrel before a bounce. Overall, though, we're still locked in this confined range of somewhere around 71.5 to 78. So no doubt the bulls will return and expect a correction back to that 76 to 78 region. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report and hope you enjoy the great start to the day.